Yo, what's good, YouTube? What's good? What's good? Welcome back to the OB Zone. Today, hey, we got a good show in today. I'm gonna teach y'all a couple of my trading strategies that I have. First thing I want to do is, I know we're going through a tough time right now. Shout out. I won't say shout out, but I just want to send out my prayers, and my hearts and prayers go out to everything that's happening right now in the Iranian war, all the U.S. troops and everything that's going on. I don't want to make light of that situation or slight it in any way. But I am going to go over some of the strategies I took during this war to get me paid. Now I want to get y'all paid too. Um, let's get straight into it. I'm gonna show y'all how I went from 4K to 19K in 1 month. 1 month span, from in a whole month of February, I went from 4K all the way to 19K. No fluff. This is no exaggeration. I will literally show y'all exactly what I did. Let me show y'all right now. All right. So this is my Charles Schwab account, and as you can see, if you can follow my cursor right here, I had 365, right? That's January 29th. That's $365. And I inserted 4,500 January 30th, and from there we took off. I'm gonna show y'all right after I get done off of Charles Schwab. I'm gonna show y'all the exact trades that I took to get all the way up to 19K. Um, so this is my account right here. For we had a little turbulence in between. In the meantime, figuring some stuff out, taking some trades, taking some bad trades, some good trades. Figure some stuff out. We got the ball rolling at the end of February is where we really took off. Got it all the way to 10K. Finally, that was my milestone. I have it. I literally have it wrote down on my. It's crazy. Crazy thing, real quick. It's funny that I made 10K February 26th, because right, you can't see it, but right here on my, it's kind of like my vision wall, all of my goals and stuff. My goal that I set out in September, I set this goal out in September. I told myself, I said, hey, I want to have 10K before March. I said that in September. I want to have 10K before March or during March. That was my deadline. And as you can see, I hit that deadline. February 26th, I hit 10K. I was excited. I was in about 4 to 5 trades at the end of this year. I remember the war kind of kicked off during this time. And one thing that's really good, I diversify all of my stocks and all of my trades. I diversify all of them. So one of good stock that I was in is AVAV, a $9,000 trade that I took, or $9,000 swing that it gave me, because right here, March 1st took me to 10K all the way to 19K. That was all one stock. One stock did this for me, and I'm gonna show you exactly my strategy I did. Now, one thing I would say that helped me was the war really helped me, but I'm gonna tell you, this stock was gonna boom at some point regardless. But the war is the real reason why it took off like that, right? And there was also some other trades that I was in that went green as well. So it wasn't just AVAV, but that was the main contributing factor why it took off like that. Okay, and I'm gonna show y'all the strategy that I use to get your account looking like that. See, as of a 3 month change, that's 298%. 13,654 swing. And I already showed y'all how my account was looking, right? And it's only up from here. But let me show you. Let me get straight into it. All right. So this is QQQ. Let me show y'all a couple of trading strategies I have. Right. This is a trading range. QQQ has been in the same trading range for. Let me take all this stuff off. Let's take all this off, so y'all can see. Uh, these little money things. This is when I got some money. I love seeing these. I ain't taking that off. These are my money symbols. That mean during this time right here, I took a little profit. I like that. But anyway, I'm gonna delete all this. So I'm gonna show you from scratch exactly what I do when I look at a stock. Right. So QQQ. If you don't know what QQQ is, it's technology ETF. Pretty much all of the big tech companies are inside of QQQ. All right, it's an ETF. If you ever need a good ETF to get in for long term, QQQ is a good one. And the reason I say it's a good one, before you look right, you have to look left. I'm gonna say that one more time for the people in the back. Before you look right, look left. All right. So you always want to go back to see how this ETF or how this stock did in the past. So let's go 1 year. So this is what you want to see. This is a major uptrend. And this is why I said this is a good ETF to get into long term. I trade it short term right now, but realistically, I should be trading this long term. I should just have some money, some shares into this stock, and I should just be keeping it in here long term, right? So this is trading at $420 at the price. This is April 25th. This is only what this last year. This is almost a year ago, and that's at 423. So if you got you put a whole bunch of shares into it right a year ago, you would be sitting pretty good right now, right? So let's get into what I did, right? First thing I look at, right? I kind of gauge, the first thing I want to gauge is the trading range. I want to gauge the trading range, right? So this trading range, first thing I want to draw is I want to draw support. This is my support line, right? And this is 3 touches, right? If you don't know the support line, support is pretty much where these candlesticks are bouncing off of, right? Support is going to be at the bottom, resistance is going to be at the top. This is where it's stopping at. This is where the bulls, or I would say not the bulls, I would say the bears are kind of getting stopped out of it. They're trying to get down below, they're trying to get down to 593, but they can't. See, if you see right here on the right, they're trying to get under this 595. They're trying to get down here, but they really can't. Every time I get down here, the bulls are pushing it back up. They're pushing that stock price back up. So this is the first thing I see. I said, okay, cool. I said, all right, bet. I seen this, and this ain't the first time it did this. It done this a couple times. I've been watching this stock for a long time. I could really, if I really wanted to, see. This is why that blue line is right here. You see this blue line? I've been watching this stock for months. So really, every time, every time QQQ gets here, it literally goes up every time. Every time. Look at this. Every time. We have how many times it did it? One. We got about two, and I'm in. What am I in right now? I don't know which. I think I'm in a month. Wait, let me see. Oh, I'm still in the 6 month. So this is really more. If I really zoom in, it's probably more. So look, it's one. We got one right here. We got two. Every time it touches this line and goes up, there's three, 4, 5, 6, 7. That's 7 times. That's great. That's a great trading range. And really, it's gonna be more because it's over here too, 8, 9. So it's almost 10 times that it's hit this resistance line. I mean, not resistance. It hit this support line, and bounced up. So that's the first thing. This is why I trade QQQ all the time. And what's funny thing is, I was all right. This is really dangerous. I shouldn't even be saying this, but I was in the car today by myself. I was on my way to work, and I seen QQQ this morning was at 593 on my phone, and I'm looking at my phone. I'm like, but this is a major buy signal. Like I've been every time I see QQ at 593, I literally I be itching to get into it. But my phone was like glitching this morning. It was doing something stupid, so I wasn't able to get to it. And I'm gonna show you exactly why I missed out on the play today. I missed out on a couple plays today. So I missed out on this play today. This happened this morning, 10:30. This is around the time I seen it too. 10:30, I seen it at 595. I said this is gonna shoot up because it does it literally every time. And what did it do? I looked around lunch. Well, what happened? What time was it? Yeah, like around lunch. I get on my break at work. I said, look at this. I said I just missed out on some money today. So mad. I can't wait till I quit my job and I'm day trading. This won't ever happen. Like it would never happen because I'll be able to day trade and just sit at my computer and just make money. I would never have to worry about clocking in. So that's why I missed out on some money today, and that's why I didn't take this trade today. But this is what you want to see. This is called a trading range, right? Trading range is pretty much the support and resistance levels and everything that's in between it, right? So this is pretty much I would say this is pretty much, let's see. Yeah, you can really put it right here. This is one right here. And then really, I'm really out too far. I'm out too far. I should be like right here. Let's not worry about that right now. All right, so I should really be like right here. All right. So I should really be right. Hold on, let me draw this line. So I should really be like right here, right? This is where it's kind of like right there, and then you got another zone. We got another zone about right here. This is a good zone right here. This is where it stopped. This is really a good zone. This right here, this is a good zone. This is what you want to see, right? Right. So every time it hits this line, this is good. So this is what I like to do with QQQ. If it gets between 600, so let me show you what I do. Let me show you exactly what I do. Where is? Hold on, y'all. Okay, I create buy zones. That's why I bought this right here. I create buy zones, right? And I'm gonna show you something new that I've been doing. This is why I got so much money off AVV. This is something new. It's called averaging in, right? I used to when I bought a contract, I used to buy one contract, and if it went below, I would just wait for it to pop back up. And I still get money, but not as much money as if you average in. And let me tell you what averaging in means, right? So say I buy a contract. So this is my buy zone. So I know between 600 to 595, or really I can go lower if I really wanted to. Really, that's really, yeah, 600 to here. This is my buy zone, right? I know this is my buy zone. This is where it pops up every time, right? This is my buy zone. So this is what I would do if I was actively trading this stock, because the thing is you can't predict when it's gonna bounce up, so you don't know. So you see how right now, right here, it bounced up at 599. It didn't get all the way down here. It bounced up, so you would have missed out. You'd have been waiting. You waiting. You like, oh, OB said it hits this line. It's gonna go back up. Yes, that's true. That is what history is telling us, but doesn't mean it's gonna always do that. Like I said, like you don't know. You don't want to try to predict or try to time the market. Never try to time the market. All right. You set yourself up strategically to get in position. Right. You want to get in position. So this is what I do. I put a buy zone in at 600. This is where I would have bought my first contract. Right. You buy your first contract at 600. Okay. Let's use right here for example, because this was a gap down. Let's use right here for example, and the gap down is right here. You see this space right here? That's a gap down. That ended. That was between. That usually happens between 2 days, like the end of one day and the start of the day at like 9:30. But anyway, let's use this for example right here. So this is what I call averaging in, right? So you buy right here at 600. You buy at 600. Let's say it don't go up. Don't worry, don't panic. If your stock don't go, if you have a good setup, and if your stock doesn't go up, if it goes down, that's you should get even happier. It doesn't sound right, but let me tell you why. And when I go to AVV, I'm gonna tell y'all why. Right? It's gonna make way more sense. It's gonna make sense right here too. So let's say you bought it 600. You bought it. You're like, dang, my stock going down. You losing money right here. You're like, man, is this not a good trade? Like, what happened? Like, no, be patient. This is a stock trading, and investing is a patience man game. So I would have said another level, right? Uh, let's say 600 you buy, it goes down. 597 or 596 you can buy again. So now you got two contracts in, right? The magic number is always 3, right? So now you in at 596. It's still going down. Bam. All right, one more. Let's go. Let's do one more. You do 594 or 593 ish. You should be all out. All right, you got all your chips in. You all out. Now you just wait and you just wait, and you wouldn't even for this stock or this for this ETF or QQQ, you don't even have to wait long, man. Within a matter of, this is all in the same day. So within a matter of minutes or like an hour or two, you'd have already seen, okay, cool. We going back up. All right. We going back up. And you just wait. You just ride that wave. All you gotta do is ride that wave. And then you want to start taking your profits. Always have a profit goal. All right. So you went in at 600, you got all the way down. This is a lot of money you get in, because the more contracts you put into a ETF stock or whatever, the more contracts you put in, the more money you're going to have as it goes up. Right. And I just learned that I didn't used to do this. I used to just put in one contract. It used to go all the way down. I used to be so patient. I used to just wait for it to go all the way back up, which is not bad, but it's not an ideal strategy you want to use. This is a way better strategy. Okay. You also, another thing, I like to talk about the pros of it going up. Let's talk about the cons. You do want to have a level, like there you do want to have a level where you like, all right, I'm out. This stock is way too low. All right. Because if you don't be too patient, you can't be too patient. All right. So if this stock would have got to 587, I haven't seen it at 587 would have been my stop loss or my pretty much where I would have got out of the stock or got out of there. Because I haven't seen it at 587 since history shows it ain't been 587. Look how far I'm struggling since November. So which means something went totally wrong, right? So if it went below this, I would have been like, all right, then I would have got worried. That's when you get worried. When it goes, when you do your strategic or you do your plan, you always gotta have somewhere where you're like, all right, this is enough. Like I'm losing way too much money. All right. Because think about it, you already averaged in at 600. Once you get to 592, once you get into that 580, 588, 585, once you get starting to get into that dangerous waters level, then you want to start, all right, this might be a bad trade. And a bad trade doesn't mean that, you didn't do something right. It could have been the headlines. It could have been something went wrong. You could have been trading on earnings. It could have been something where you just didn't see, you got to go back to the drawing board. But for this particular stock, this isn't, well, I take that back. QQQ. Well, ETFs don't have earnings. That would have been for a regular stock. But for this, for ETFs, or for this ETF in particular, QQQ, um, this stock does pretty much the same thing every time. Like it does the same thing. I've been trading this stock for a little minute. So you would have been pretty good. But in a worst case scenario, if it gets down, you want to have you do want to have somewhere where you take your profits. I mean, exit out the stock. And actually, you do want to have somewhere where you take your profits too, because if you hold on for your profits too long, thinking it's gonna go all the way up here, you might lose your money as well. And I'm gonna show you exactly how that almost happened to me. Right. So once you get up here, I would have set my profit taking level, and think about it, you're averaging in, so you have 3 contracts in, right? So that means you have to exit out of all 3 of those contracts, or you can leave runners. So what I like to do is once I get to a comfortable level, or in my trading journal, whatever number I wrote down, where I'm like, all right, this is where I'm comfortable at taking my profits. What I do is I get out of one. So I would have got out of one probably at 607, 608. All right. 609, I'm getting out of my other one. All right. Then I'm just leaving that last one. That last one, I'm going to leave and I'm just going to watch it. Okay. I'm watching. I'm like, okay, once you see this, once you see this right here, this little congestion part, once you see this little congestion, um, this is where I usually get out of my other contract, because this is usually where it fizzles out. So you see how we're on an uptrend right here? Right here, we're on an uptrend. We're on an uptrend right here. And once it starts to fizzle out and get into this it creates its own little range. That's when I'm like, all right, okay, cool. I made my profits. I'm good. Okay. Don't get too greedy. You want to get your piece and get out. All right. This is a this would have been a successful stock. I mean, not stock. This has been a successful ETF and a successful trade. I don't know why I keep trying to say that word. I'm tripping. All right. Anyway, we off QQQ. That's what I see for QQQ, and that's how I trade QQ. And this strategy ain't broken. I could literally do it right now. Um, right now I could literally just go back. Wait, I'm tripping. Hold on. This strategy is not for QQQ. You can literally, I will keep this box right here and literally just move it all the way down. And the next time that it gets into this, I will literally do the same thing. This strategy is not broken. This is unpatched. They have not patched this yet. Every time. And really, this is a little more advanced, but I could have been taking puts when it gets to 616. Every time I get to 16, I take puts, and then I could take calls. Like I could have been doing that. That's an infinite money glitch, right? Or what you really should be doing, or should not you, but everybody, including myself. What I really should be doing is just playing a long game and just put some shares in it and just watch my money grow. All right. But right now I'm on a different wavelength, or a different path. All right. But that's really what I should be doing right now. And I need to set up my portfolio for long term as well. Now let's get into how this is actually my biggest trade ever. This is my biggest trade I ever had, right? I have been watching AVAV for a minute. So let's go. I'm gonna leave this up here for a minute because this really shows you how I this is I'm gonna show you how I really broke down this stock. So AVAV is um has a lot of government contracts. It's in a defensive sector. Um, they make a lot of drones, a whole bunch of military equipment, and they do all that. So that's why when that war popped off and we started striking and doing using these drones, this stock took off. And that's why it's good to be diversified in your stocks. You don't want to be in the same sector. You don't want to have too many technology stocks um in your watch list. Like you want to have a defensive stock, a tech stock. You want to have some Amazon in there, Google. You want to have some stuff where TTWO. You want to get into the health sector. What else? Yeah, you wanna hit all the marks. McDonald's, Wingstop, some things that have nothing to do with each other. You wanna be a little diverse, right? So let me show you how I broke this down. First thing I noticed, this was October. I went what I say. Before you look right, you gotta look left. This gonna look like gibberish right now, but I'm gonna break it all down. The first thing, this right here, this ain't nothing but my support line, right? So I say, hey, every time it hits this line, and I can really make this a little longer pause. Every time it hits this line right here, we going up. Every time it hits this line, we going up. I said, okay, cool. This is a good little stock. I knew I had nothing when before I researched this stock. I had no idea what this stock was or what it was about. So this is what surprised me when it hit this line and rolls up like this. I said, "Ooh, I missed out in September." But anyway, so then it went on a little downtrend, and actually, now that I see, uh this is actually routine for this stock. This ain't the first time it did that. Yeah, now that I'm looking at it, I'm seeing something now. Every time it rises up like that, it goes down sharply. Every time. This one it didn't. It kind of like it didn't. It wasn't sharp, but it still went down to this line. Right? We gotta keep watching that. It rolls up and then it drops sharply. That's a sharp drop right there. Right? That's all of November, December. That's a downtrend. There's some uptrends in that, but it's really a downtrend, right? So let me show you what I looked at. I missed out on some money, right? Let me show you. So I located this downtrend. I said when it hits this, it goes up. So we saying this, we see this. This is a downtrend right here. This is a little trading range. This is a falling wedge right here. And the falling wedge, I'm gonna show you what that is. Let's go over. Let's go to Google. Falling wedge. And this is my first. So it's a falling wedge. So pretty much, if I can click on one of these, falling wedge. So you see this? This is a falling wedge. See how that's going right there? You draw your line right there. You draw your line right here. That's a falling wedge. And really what you're looking for in a falling wedge, you're looking for it to break either support or resistance of that wedge. All right, you can get in early right here if you want to, or you can wait for a couple candles, a couple green candles, and then you can enter it. All right, so that's what you're looking at in the falling wedge. Or the opposite, you waiting for some puts. You wanna play some puts. You waiting for it to exit out of this support line right here, and then you can wait for some more red candles, and then you can enter some puts, however you want to play it, right? But let's go back to what we were looking at. So I need to zoom in some. So this is my falling wedge. I located this falling wedge. I said, okay, this is a little falling wedge right here, and look, I could have took some puts right here, could have made some bread. All right, so all of these lines, it's a lot of lines on here, I'm not gonna lie. All right, when I chart, I'm not gonna lie, all these lines mean something. They might look like a whole bunch of just stuff, but these lines all mean something, right? These all are falling wedges, little falling wedges. I'm just drawing some I'm just drawing these ranges, these lines right here. But let me show y'all something real quick. I need to get closer. All right. Let's go one more. Okay, so this is the first one I missed out on. So I told myself, I said, when it hits this line, you see this white line right here? I said, when it hits this white line, I need to buy. All right, this is when I actually started charting this stock. So it hit this line, but the thing is, The crazy thing is, when it hit this line, this all happened. Um, this 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 kind of happened at the beginning of the day. So soon as it opened, right? So before I even knew it, 9:30, 9:35, it was already at like 2:44. From like 2:34, it was already at like 2:47 when I looked at this. I said, dang, I missed out on this. I don't like to get into trades late. So it gapped up right here, right? It gapped up the next day. And this actually just rose up. This is a play that I called and I didn't even get in there because I don't like to get into trades late. But if I would have got in, I still would have made some money. But I don't like to predict, and I don't like to do that. I like to get into trades when I whatever I already charted out. I don't like to get into trades after it's already then went up like 13, 14 points because I don't think because that's my money that I want to have. I don't want to wait too late because it rose up. Looking hindsight, I don't know if it's gonna do that, right? So I would have liked to have already have been in this, but I got in. I hesitated. I should have been in this the day before, but you know I missed out on some money. This was some good money. This literally rose from 233 all the way to 284 on something that I had already charted, which is crazy, right? So this is why I really like this is where I really like stood up in my sat up in my chair, like, all right, I really need to lock in on this stock, all right. And I started taking this stock way more seriously because if a stock just went up that far in one day, I said, oh yeah, we got something here, right? So I started looking at this stock, and then I missed out right here. This is why the red box is right here because this was a missed opportunity. This got down to 246, right? This was actually in my zone that I had drew right here, and I missed out again. That's another miss. Wait, let me go to 5 day. Yeah, so that's in my zone. So then I drew another zone. So this I did something different. I said, you know what I'm gonna do? You know what I'm gonna do? I said the next time it gets, I drew this green box right here. I hate when it does that. Hold on, y'all. Where's that button at? Here it go. All right, there we go. Let me get something. Let me get to my part. Hold on. Let me tell you where we got funky at. You gonna see something. This is actually insane. All right, this is where I made my money. So I drew this green box right here, right, and I got into the contract like I believe Thursday or Friday, most likely Friday. Got into this contract Friday. Hold on, y'all. All right, so I got into this contract Friday, right? So I held on to it. I held on to it. I'm not gonna lie, it was looking bad. I won't say looking bad. It started going down. But remember, I told y'all on that last stock on QQQ averaging in. So I averaged into this stock. Let me tell you why I made so much money, right? So I averaged into this stock. It was at where did I go in at? Now this is how I figure out how I went in. Okay, so I got in at okay, now I remember. I remember now. I got in at 255. I don't know where 255 is at. I don't know. Maybe I got in Thursday. It had to be Thursday. Yep, that's what it was. It was Thursday. Okay, so I got in at 255. As soon as I got into it, it went down. I got into it again at 250. All right, I got into 250, and at 245, I got in again. So I'm 3 contracts into AVAV. The reason I'm 3 contracts in, because it's known for going from 247 and it went up, right? So I'm like, okay, we did that already. I see how it trades. I say it likes to bounce up from that level. Okay, cool. I stayed in that. I'm 3 contracts in, and it's staying between 246, 247, 251, 247, 251, and bam, we had a gap up Monday. It went all the way and hit 290. This is my $9,000 play, right? Now, granted, every This strategy doesn't mean it's gonna gap up, right? This is kind of this was just a good position that I was in, but using this strategy, averaging into a good A plus setup, um, it you might not see this gap up like that, but you will see it gradually go up in time, which this stock was gonna go up in time because it likes to play around in this range, right? It likes to play around in that 260 range. That's like it. That's where it wanted to be anyway. You see how it went from 247 all the way up to this 260 range, right? I got a little bit luckier, I will say, because it went past 260 and went to 290, right? And that's because of the government, and that's why I'm saying you have to be very, very diverse, right? That's why I'm in the defensive stock. I'm in the health stock. I'm picking all of the top stocks and all of the top sectors. Now, another lesson number 3, right? This is a very important lesson. Knowing, I actually kind of touched up on this, knowing when to get out of a trade. I probably, I don't know my math right now, but I probably could have blown my account almost if I would have stayed in this contract. I stayed in this play. Let me tell you why. So we hit we hit from 251 and we went up to 290. We looked good. I held it for a little minute. I got out of one contract. I got out of two contracts. And then eventually I got out of my last contract at, I remember exactly when it was. It was at 290. So right here, I got out of my last contract. So I was up 10,000, and when I closed out, I was up like 9,000 something, right? But if I would have stayed in those three contracts, trying to be greedy, trying to, let's see if it gets to 310, let's see if it gets to 20. If I would have stayed in those three contracts, not only would I have lost that 9,000, I would have lost more than 9,000. I've never seen this is my first time seeing a stock rise up this far and shoot down that fast in the same day. And this was me actively watching it. I actively saw this in the morning. I woke up pre-market and seen this and was licking my hands I said licking my hands. I'm tripping. I'm licking my fingers. I'm like, hey, this stock going stupid. I'm talking to my daughter. I said, hey, we making bread today, right? Um, I'm like, I saw this. I got out of this contract at 290. I looked back at my phone. It was at 221. I said, what happened? Like, how did it go down? This is at 1034. 1034 is at 293. At 1123, we already at 219. And not only it went all the way down, it got all the way down to 190, 199, 200. And I couldn't really I wasn't day trading. I wasn't actually on my computer because I was about to get into it again if I could find a dip, but it was going down so fast. I said, I don't know where this stock is going. Like I couldn't even. I'm not because you don't want to time it. You don't want to get in right here. I could have averaged into it, but I'm like, I don't know what this stock is doing, and also I don't know what news caused this stock to slide right now, slide that fast. So I didn't want to rush into that trade, right? So this is a good lesson, right? You get your money, you get out fast. Don't play around with that. Have a number in mind. Now, I'm not going to even lie to you. I did not have a number in mind because this passed all of my numbers. When I woke up, it was already at 290 something. I didn't expect it to be at 290 something. Nothing suggests that this is going to be all the way up here. Like, no, nothing back here suggests that. You look left first, then you look right. Look, I can't even look. I gotta pay for five. I only get 5,000 bars. It's crazy. Anyway, so this is above my level. My level was like 285. My level was in this range. This is why I'm starting averaging out. It was already up here, so I started averaging out as I go. Lord behold, if I would have held on to this trade, I would have cried by 12 o'clock this day. I would have been crying if I would have stayed in that contract, especially if I had three in there. If you have one, you could have got out. At some point, you probably would have lost 1,000, 3,000. But if you'd have held on to it, probably would have been more. Puts here would have been crazy. But that's all for this episode. Hope y'all learned something. This is my trading strategy. I'm gonna go over some more trading strategies. Man, y'all just stay tuned, man. I'm trying to put some money in y'all pockets, man. Like I'm just trying to put some money in y'all pockets. This is a wild time that we in. It's a really wild time that we in. But I'm gonna leave y'all with a few gems though. Like this trading stuff can really change your life. This ain't no game. This is not a game. This is some real life, life changing money, life changing game. Like I started doing this a year ago, literally a year ago. Researching every night, reading books. I got the Intelligent Investor, day trading, swing trading, candlesticks. Um, Warren Buffett his two-step techniques, man, everything. And I really like you really gotta live and breathe it to really see a real change. But if you don't have to go that route. If you Everybody should be investing. What I tell everybody should be investing. You don't have to go the route of studying every night. And, I know people I got a daughter, so I know some people are not built like that to do that, to be able to work, take care of their kids, and like stay up all night charting and investing and doing all that stuff, right? What you could do is just, man, there. I'm gonna go. You know what? I'm gonna say that for my next YouTube. I'm gonna say that. That's a whole different episode. But yeah, man, yeah. Hey, y'all stay blessed. Stay out the way. Stay out of trouble, man. Peace.